Good evening out there. I can see some of you have arrived already. If you can hear and see me clearly, then please type a quick Y in the chat, if you will. It's good to see Bent. You're with us again tonight. I will be turning my sound off, just we are starting about 9 minutes, so I'll be back shortly. Welcome to all of you, those of you joining now. We are starting in about 7 minutes or so. It is me that will be doing all the talking today. Liam has his birthday today, so they are having a family party of some sort. So I will be doing all the entertaining tonight. I will shut off the sound now, and I'll be back in a couple of minutes. Hello and welcome to all of you. We are about 5 minutes out, and It's nice to see you all. Just getting my waiter here to bring me the life essentials. Hell, is there still no sound? I had just muted myself just shortly while we were waiting to start. I hope there is sound on it now. Haley, can you confirm that there's sound in your end now? Anyone else that can confirm that there's sound? Haley says there's no sound. Can all of you other out there, can you hear me? Thanks, Jesper. Very good. Thank you, Bent. Thank you, Sultan. Cool, Henrik. Thanks a lot. Also, for those of you that are here that are mainly Danish speaking, I'm not sure if you're aware, but yesterday we had the same webinar just in Danish. And it was meant to have been uploaded this afternoon, but it got delayed a bit. I will upload it after the webinar here. I think we have the recordings ready. So just so that if you struggle a bit with your English, it is also in Danish. And by the way, if I seem a little bit occupied tonight once in a while, it is because I have my trading good luck charm sleeping with me here. Can you say hi? So that is why I might sit a bit weird once in a while. But we will begin in a couple of minutes. All right, we're just about to start out in less than a minute. I hope you've had a good day in the market today. The market is doing awfully well. S&P 500 is up 0.7, Nasdaq is up 1.3. RSP though, the equal weighted index is only up 0.2, which is a bit worrisome, I would say. All right, markets are looking nice and green all over. We will also have the interest rates coming out tonight, the Fed rate decisions, and I might just start that up just in the end of the webinar. We might be doing a a quick look over and have a look at the interest rates just live. Let's see, economic calendar. Here we go. Yes. All right. Let's start out. Welcome to all of you. Nice to have you here. We are a good little group of people in here on a Thursday night, and we'll be having a look at market timing. Now, if any of you don't know me, my name is Hans Henrik. I'm half 50% of the My Stock Scanner team. That is Liam and I, and well, we have brought a helper in, Jesper, on the marketing. We are looking for bringing in some more programming help, and so we are just growing nice and slowly here on the My Stock Scanner. We have it's exactly a year since we started out with the first paying customers. I know some of you that are here tonight are actually among the very first people that joined us, so thank you very much for your support. What we have done is, if you don't know, I guess you have followed the other webinars. We have built something we call the 3-point playbook. And the 3-point playbook is basically just a strategy. It's a structure so that we can have a decision tree, a decision structure every single time we buy or sell a stock. And if you have seen the first couple of webinars, we have our different questions. I'll go through them tonight, but we have the questions asking. The first one, is it a solid stock? The second one is if the stock is priced correctly. And then the third one is the one that we are actually going to talk about tonight. Let me just share my screen. Here we go. So timing the market, that is one of the more controversial parts when we are investing, because that we often hear it is impossible to time the market. And I partially agree in a way where we cannot time it exactly, but we can get a lot of help from the market, from the structures we're looking at. And what we're going to have a look at today is, first of all, our own TPI indicator, the turning point indicator from My Stock Scanner. That is the one that looks, if we take a random stock, not sure it's that random, I use it a lot, the Danish Novo Nordisk here. Let's see, here we go. In here we have the TPI chart, and we will have a look at that today and see how can we work with that. So that is the one part of it. But we'll also be looking a lot at charts today, and here I will be using the TradingView platform. Many of you know it. It is just tradingview.com, and some of you have a free version, some of you have a paid version. And what we are doing, and I know we promised that for a while, but it will probably here in mid-late November that we will have the TradingView, all of the TradingView charts implemented into My Stock Scanner. So we are looking forward to that. Liam is struggling with that right now. Not right now, he's having a birthday party, but that will be here in quite a short while. So let's just give a quick summary here. What we're focusing on is how to sleep well at night while investing. And as some of you know, if you've heard me before, what we're doing is we're never guessing. We're never trying to be a fortune teller like the lady here. We never try to guess if someone is the big new thing, if someone is the winner of the EV market, if a company is the winner of whatever mobile technology or streaming or whatever. We look at the facts, we look at the projections, and then we try and time the market. My original company was called Market Timer, and that was meant like a bit of a provocation because so many people said that it's impossible to time the market. The thing they mean with that, most of them anyway, is that they have been on some educational, some financial education, where they've had a professor telling them about something called the efficient market hypothesis. That means that the market is efficient all the time. It's completely random, basically on a day-to-day basis, and everything is priced in. I will show you tonight that I don't agree with that. And what we are doing is we are not talking about certainties. We never talk about certainties. We talk about probabilities, talk a lot about stats. And I often show this map here that you probably know. It's a weather map. And what these meteorologists are doing is if they are saying that tomorrow it'll be 20 degrees and sunshine, they don't know it for sure. They're talking about probabilities, meaning that they have a ton of models, of stats, and they are saying, all right, well, 82% of our models are showing that, for instance, in here in Viborg in Denmark, where I live, it'll be 20 degrees and sunshine tomorrow. But that still leaves 18%. If there's an 82% chance of that, that leaves an 18% chance of something else. And when we invest, we never ever say this will happen with certainty. But if we can find a method, a strategy where we can have our long-term holdings being stocks that are where we can have, let's say, a 60% win rate or 70% win rate, and that our winners are significantly larger than our losers, then we have a good strategy. Then we will be long-term winners. What I personally am looking for is what I call the freight train stocks. Sorry that this isn't Danish. Forgot to translate that. The freight train stocks, you should picture yourself that you are standing next to some rail tracks and you look in one way and there's a big freight train coming, and you can look down the tracks and you can see it has been rolling on and on and on for the last 5 kilometers, 10 kilometers, 100 kilometers. It is just a steady train rolling along, maybe speeding up. It's a good quality train, and the tracks are good. And then you look to the other side where the train is actually going now, and you can see that the tracks are nice and shiny. There's no they're not eroded in any way. They're not blown up by a saboteur. They're just good, stable tracks. And you can see that that freight train coming will have a very good chance of continuing uninterrupted. And that is what we're looking for in a stock. We're looking for stocks. And that is our first two questions. Is it a solid stock, and is it well priced? These are the questions where we are looking down the tracks to where the train is coming from. Then we're looking to the other side, and that is where there is a bit of projection, where we are saying, all right, well, what do we think will happen in the future here? And if the probabilities are in our favor, we invest. We never ever know which of our investments will be the winners. We can just see that we have more winners than losers, and that our winners are larger than our losers. So never feel like beating yourself down because you invested in the stock and turned around and gave your loss. That's part of the game. You will always lose some. So let's just have a quick summary. We have the three questions here. Is it a solid business? Is the stock correctly priced? And these two questions were addressed in the first two webinars. They are on the website, so you can see them there. Now, the question of today is, that should be an S. Is the timing right? Here we go. There are some extra questions. For instance, when to sell. When do I want to sell this? And I'll show you some examples of that tonight, because I have sold a couple of stocks lately. As one a winner, one a loser, and I'll tell you a bit of the logic behind that. So questions about when should I sell, but also are there some macro news affecting the stocks? And that is where we in the group, in the membership group, for those of you that are members there, you can see that I have been commenting on the last couple of days, for instance, regarding the presidential election in United States, because going towards Trump will definitely move some fundamentals. For instance, we can see that the interest rate is skyrocketing right now because Trump's financial plan, if he gets all of it done, which he most likely will definitely trigger a lot of inflation. He will pump a lot of money out in a already reasonable stretched economy, and that will definitely bring in some inflation. That will make the rates go up, and again, you can see the US dollar is also going up as an effect of that. So knowing that, makes it quite interesting, because then we can start to consider which stocks will be hurt, which will benefit from higher interest rates. Well, for instance, the bank, all financial institutions, insurance companies, and so on, they will definitely have a good time in a high environment, high interest rate environment. We can see other stocks that will benefit from high inflation. Some will be hurt by it. Now, a very much higher US dollars will hurt some businesses and benefit some others. So these are all the questions that we are addressing on a day-to-day basis in our group. So let's have a look at it. As I said, we are going to have a look at, is the timing right? And for that, we're going to have a look at the TPI indicator, and we're going to have a look at some charts. Now, let me just address the chart part first here. Now, yesterday when we had our Danish webinar, there were a couple of questions about how a chart like this is constructed. So let me just give you a quick summary here, so that we are all up to speed with what this actually is. First of all, as I said, this is a tradingview.com website, and what we see here is something called a candlestick chart. These are green and red bars or candles here. And what we can see here is that if it's a red candle, let's just have a look at it. If it's a red candle like this, it means that on this very day, this is a 1 day, we can see it says D here. So this is a 1 day price movement in Ambea, a Swedish stock that I have in my portfolio. And when it's red, it means that the price started at the top of the body of the big fat part of the candle here, and it ended at the bottom of the candle here. Now, during the day, there was a movement downwards here. We can see that is what is called a wick here. So during the day, it was a bit further down, and then it ended up here. Had it been a green candle like this one, it means that we start the day in the bottom of the candle and end in the top, meaning that this is an upwards, a positive day here. And with this candle, there's almost no wick, so that means it basically just started here, and all day it was between these 2 points. So, and if there are any questions for that, feel free to ask. But this is basically what we're looking at when we're looking at charts. Now, what I normally look at when I am doing my analysis on this 3-point playbook is I'm looking at the weekly chart. And that means that every single candle here is 1 week. So as we can see here, Ambea has had quite the volatile week. We can always, when we hover over here, we can see up here what the stock has done this day or this week. So since this is a weekly chart, this is the weekly movement. It's up 8.8%, which of course is nice, but it has been down here. It has always been up here. So a very good week for Ambea here, definitely. So what I'm looking at here is that we basically have 2 different approaches. Let's have a look at it. I have trends, and I have support and resistance. And they can actually, we can also put some support and resistance areas on our trend chart here. But a trend is basically a chart where, if it's in an uptrend, we have higher highs and higher lows, higher highs and higher lows. As long as it keeps making higher highs and higher lows, we're in an uptrend. The second we start to make a lower low, let's say we have been in an uptrend here, and it started to move down below this bottom here, this low here, then we start to see lower lows. Then we go up, build a new lower high, meaning it's lower than this one up here. And the second we do that, we are in a downtrend. And if we are long stocks, we, at least most of the time, want to be in uptrends. I'm going to show you some examples tonight that sometimes, actually, I think today, maybe, yes, today, I bought a stock where I used my other strategy, this support resistance area, which is where we buy. It's a bit counterintuitive, but we buy actually when the stock is dropping down to an area that have been tested quite a lot of times. As you can see, if we hit this one right, there's quite a good upside in the stock. So what we're going to look at, and I should say, I did mention that in the beginning, I will be talking something like 45 to 60 minutes here. Then some of you have joined us on YouTube, some on Facebook. If you're on Facebook, it means that you are a free member, or if you're participating free here, you're not a member of the platform. And after about an hour, I will say thank you and close down for those of you on Facebook. And those of you that are on YouTube, you have joined because you are members or trial members and so on. And then we will keep talking a little while there, going through a couple of extra things. So if any one of you in the future wants to be a part of the group that continues after we close the Facebook part down, there will be a mail out tomorrow talking a bit about a potential discount and how to come in and test us. All right. So what we're going to look at here with the trends, and I will start in the trading view part, and then we'll move over to the TPI chart in the platform. We'll have a look at price action, meaning how the basic, the core of the structure of the chart is built. We'll have a look at some moving averages, as they're called, and of some statistic measurement called a regression channel. We'll also have a look at the two different type of trends, and that is an arrow trend and a D trend. All right, so let's jump into the charts. Now, what we are seeing here, and let me just see, I think we can hide all of this, hide all, like this. What we see here, as I said, is a weekly chart. We can see it says 1W here. We can also see it up here. And what we can see here is a chart where we have two different trends. When we do it like this, we can see that we have, let me see if I can, sitting with this tiny kitten here on my lap. We have a top here. Oh, for some reason that came back. Let's try. That is because I'm drawing here. Weird. Let's just delete it then. Like this. And we will, let's just do it like this. All right. What we can see here is we have a top. Then we have a bottom or a low. Then we have a high, but that is a lower high compared to this one. Then we have a lower low. Then we have a lower high. Then we have a lower low. And as you can see, that can continue for quite a while. And sometimes we see that we have equal highs or equal lows. But as long as we haven't for real started to break up above these highs here, well, then we could be in a sideways trend once in a while here. But then we start to make a lower low and so on and so forth. At some point, we can see that here we start to make a new higher high because the last high was here or wherever. And then we start to make, first of all, maybe a new higher low, then a new higher high, then a new higher low, and then we are in an uptrend. That is basically as simple as it is. And when we're in this uptrend like here, well, then we can enter a trade. I'll give you some of my rules for entering in a trend trade. And I think where I actually ended my main position here was up here, meaning that when we're looking at trends, and first of all, I should say, I do not enter a trend or my support and resistance stock unless that I have answered yes to the first two questions. Is this a rock solid stock? And two, is it priced correctly? And that was what I found down here with Ambea, both a very good stock and priced very cheaply. So what I basically did was I had a potential entry here, but I took my main entry here. Now, why is that? Well, when we're looking out over this chart, first of all, you must understand that these structures, these highs and lows, they don't appear magically. They are there for a reason. They are built up because of different structures. As you know, there are a ton of different people in the market. That could be a short-term swing trader. It could be a day trader. There could be a big financial institution, a a pension fund or something like that, a big hedge fund, maybe someone that buys to hold their stock for 10 or 20 years. So there are all sorts of different people or mechanisms in the market, and they create these movements. It could be that if we look at this, and I should say that I know some people like to draw exact lines like this one, and it should just touch exactly on the tops, something like that. I don't do that. I use my rectangle here and I draw broad areas like this because there's no exact, it's not on the decimal, on the 0.01. That is not important in the market. What is important is if we understand how this is created, we can get better at spotting the different mechanisms and structures. Because the reason for this, there can be a ton of reasons, but let me walk you through some of it. We are in a downtrend here, for instance, and someone thinks that the price from here is going to go up, for instance. And it does for a while, but then some people are taking profit, some are selling out, and all of a sudden it breaks down. And the person that went in here, he's all of a sudden he's in a lot of pain, or she, but in a lot of pain because they're losing money. And they might think to themselves, if I could just get out again at the price I paid, I would, and I wouldn't stay in this trade. And maybe a ton of people thinks that. And when it comes up here, they have a lot of limit orders saying, I just want to get out of this level. Please relieve me of this pain. And the second we come up here, it is shut down again. It could also be that we have an area here where a big bank maybe are sitting at a huge amount of these stocks, and they think that the projections or targets in the future are somewhat lower, so they want to get out of the stock. However, they're not selling at any price. They have a strategy meeting, and they're saying, we think that 48 and a half, like this one here, 48 and a half. Let's try again. Like here. They're saying this is the area. Whenever it hits 48.50, we're going to sell. That is a fair price. We do want to sell, but we don't want to sell at any price. And they have hundreds or thousands or tens of thousands of stocks in Ambea here. So what happens is every time it gets up here, it triggers a lot of selling from them. And they have a little alert going up and saying, oh, you can pump out 1,000 or 5,000 stocks more in the market than they do. That presses the market down. Then buyers are coming in, and we get up here, they get the little alert again in the bank and saying, now you can get rid of some more stocks. And they do. And it comes up again, and they're selling. And these are the structures, these are the mechanisms that build charts. At some point, they reach a level where a lot of participants in the market, maybe not all of them, but some of them are saying, all right, around the 30, 32, 35, that is actually a fair level. We think this is where we want to start buying. And then they start to buy, and we can see they start to create a new top here. And there might be a bit selling. There, some people have taken the trade down here. There a bit of profit taken, and so on and so forth. And all of a sudden we're starting a new trend. Now, what we can see often is that these areas where a lot of people have traded, where they have met a lot of support or resistance, and as you can see here, it's both support. Then it comes down here. Then this area is a resistance. At these areas, something often happens. And it could be self-fulfilling prophecies because a lot of technical traders are sitting in this area and saying, when it gets up here, I'll sell because people have sold before. But when we got up here, we can see, all right, this has actually been an important area before. So now people start to buy. I hope this makes sense. Otherwise, you could just write me here. And we can often see this happen over and over and over again. I did take a small position in this stock here. But that was because I was quite convinced the stock was going to go up. It was good, solid, well priced and everything. But I didn't take a full position because I was not quite comfortable with this area. But it just shot straight through it. And then I knew, okay, I'll put my limit order down here because when it gets down here, we are probably going to see some fireworks. And that is what happened. I didn't know that would happen. Had no idea it would go up at the crazy level like it is now. Almost made 100% on it. But as you can see, I haven't had any reason to sell because it hasn't really made any new lower lows. If, for instance, we get something like this, where we go down through below this low and then maybe a bit up again and a bit down, something like this, well, then I might sell it. We can talk a bit more about the selling rules later today. So this is you could say my main trend. That is what I've been doing longest. That is trend following, as it's called. And there are a lot of proof in history and in statistical history, chart history, when you test this to say that momentum is a good strategy. Buying something that already has gone up is a good strategy. And you might think that's a bit counterintuitive, because why won't you want to buy down here? Well, maybe you do. It could be that you found this area, and that is the other of my strategies. That is the support, resistance and support area. When you can see that prices tend to form a new area here where a lot of buyers tend to get in, then you might actually find an entry here. You can set a stop loss very close down here and get a massive gain. I am using that, and I actually bought one of these types of stocks today. So, but my main entry was here, and that has been very profitable for me here. Another thing I'm using on these charts are the moving averages. And if you don't know what a moving average is, you probably know what an average is, because if you have, let's say, 10 different grocery items and you want to see what is the average price I paid for them, you just add them all up and divide by 10, and then you have the average price. That is basically what these lines are at any given point. This first line is what is called an 8-period moving average. So those of you knowing a bit about the moving average, you know there are several kinds of moving averages. This is a simple moving average. You can also get an exponential moving average, which moves a bit faster, and sometimes that's a good thing, sometimes it's not. But I use an 8 here and a 20. And if I change this to be a daily chart, this would just be 8 days and 20 days. But right now on a weekly chart, it's 8 weeks and 20 weeks. There's nothing magic in there. It could be 7 and 22. It could be 10 and 30. It's just to get a visual representation of trend. If you're new to TradingView, to put these moving averages on, you press indicators here. Then you choose technicals and you scroll down to moving average. And what I have taken is a moving average simple. You can take the moving average exponential, but there's no magic moving average. If someone tries to sell you an indicator with some moving average component, it's just math and there's no magic in it. But what I'm using this for is that if we have the 8 and the 20 here, the 8-period moving average will always move faster than the 20. The shorter moving average will always move the fastest. And that is, of course, because it's calculating the fewest periods back. So whenever something really moves in one direction or another, well, then the one with the shortest moving average would have the least amount of data to drag along. Let's say we took another one here, like this, and made it a 200 moving average, like this. You can see that is the blue line here. That is extremely slow because it's always counting back 200 weeks and saying what is the average closing price of the last 200 weeks. So the quicker we make this, or the shorter term we look back here, you can see the quicker it reacts. We could make it into a 50-week here, then it moves quicker, turns up quicker. And if we chose a 2 here, it only looks back 2 periods, and then you can hardly see it because it's hidden here in the bars. But that is how moving averages works. The longer period, you could say the more solid the movement, but the slower the movement. Let's see if we can get this deleted again. Okay, can always do it like this. All right, not the right way. Okay, so we have the 8 here, and we will just make a copy of that and put on a 20. There we go. Good. Now, the rule here is fairly simple. And remember, ask questions if there's any questions to what I'm saying here. The rules are fairly simple, or at least in my strategy, they're fairly simple. What I want to see is a crossover. So I want to see the red over the blue. We can see the crossover here. I do want to see a higher high. So we have that here. We have the crossover, the two moving averages are turning up. And then I want to see a retracement like this one, a little dip, a little bounce off. It could be off the 8, it could also be off the 20, but I don't want it to crash down through this moving average here. Then at least that is something else I'm looking for. So what I look for, if we draw this one in, let's have it here, is we have price moving up here. It starts to drag the moving averages up. We make a new high here, definitely a new clear high. We have a retracement down here, and then we start to move up. This is my buy signal. And if I want to buy more, well, if it continues up, then I get a new buy signal here somewhere. Now, this is a weekly chart, and this is a bit of a slow trading strategy. So it takes a bit of patience. But as you can see, there are plenty of ways to get in. You could get in here, but if you miss that one, you might get in on this one, or this one, or this one, or this one. In a good trend, there are always multiple entry points. But of course, it is fun to get in as quickly as possible. Cheers. All right, so what we have here is just a basic trend. Two moving averages, price structure showing new higher highs, and we do like to see the price breaking above some of the earlier tops here. But that is just to show us that now the big elephants are really running. I hope this makes sense out there. You're awfully quiet here, but I trust it makes sense, or you would ask me. Now, this is what I call a narrow trend. And let's just add one more thing to this, because sometimes people like to draw trend channels. You might have seen it before. It looks something like this. Let's remove all the drawings here. It might look something like this. Now, this one is a fairly simple one to draw on because it's just such a nice, clean trend. However, the human brain is built in a way where we tend to look for patterns that justifies or confirms what we already think. So, for instance, up here, where should we draw the trend or the trend line? Should that be here? Or what if it breaks up? Is it then in an uptrend? Or should we draw it here? Well, that might be a good point. Then when do we know if the trend is broken? Should it be here? Should it be here? We tend to draw the lines that confirms our bias of the market. So a little trick for you here. Up here in the drawing section here, if you press this little arrow, you will get this drop down menu, and down here you can find something called the regression trend. I think it's if you have a paid version, but at least you can, if you can make a yellow star out here, just pressing out here, you may get a favorite, meaning that I have this bar of favorite tools down here. And as you can see, I have something called the regression trend. Now, a regression line is what is called a best fit line. It's a statistical measure saying how can we draw a line through a piece of or a number of data points where it is fitting the best. How can we draw this line so there is the least distance from the line to the different points, and that is a bit of a complicated calculation. Another statistical tool is something called standard deviations. And I'll not go in depth with this. I made videos about it before. But what we do is we take the regression trend, and when we start to see a trend forming, we choose one of the lowest points, maybe down here or down here in the trend. press our mouse button, and then we just drag it up here and press it again, and then it draws a channel. What it does is, you can see this middle line here, that is the regression line. And then these two areas here are the upper and the lower line is 2 standard deviations away from the regression channel. And that is very, very often doing a fantastic job encapsulating the trend. Have a look at here. We have a top here, start to make some lower lows and lower highs. So we start to draw a trend here. All of a sudden, we have a fantastic trend. And as time goes by, we can see that it actually, it changes a bit in width. And as you can see here, for instance, it breaks up. And sometimes that is a signal that, yes, now we are in an upwards trend. However, we didn't make new higher highs here. It was just the same. So we did want to see that one break up. It didn't. It just went back. And when we dragged this one along, the regression channel showed that, all right, we are in the trend again. So at one point down here, we actually break up, and we have the higher highs. We are breaking out of the regression channel, and then we are in a new trend. Now we can't start make this trend until we are a bit up here, but it's a very good tool to help us on the way to understand when is a trend broken. I hope this makes sense out there. Could you give a thumbs up or something just to show me that you're still alive? Right, there's a bit of a delay on, I think, or you're all asleep. Let me just open a window here. All right. This is one of my main strategies. I've been using it for ages, and especially since I started to combine it with the 3-point playbook, where we look at the solid stocks and the good pricing, then it just makes a ton more sense. Now, another part or another way I'm using the support and resistance area could be in a stock like, let's say, Maersk. Here, it's a big freight company based in Denmark. And oh, there's a cat, Sultan. I think it's mine you're picturing here. What we can see here is that the stock had been trapped between 2 lines. And what I actually took a little position here. It was not a complete perfect setup, but I could see that buyers tended to come in at this area in Maersk, and that was around the 9,000 area. So it was a fairly solid company. It wasn't a complete perfect setup on the 3-point playbook. However, I was looking for an entry down here somewhere, and then we got a trigger. And I don't know if you followed the news, but one of the reasons why Maersk have been doing well is that there have been this war in the Middle East, where some of these Houthi militia groups are shooting rockets at freight ships coming through, wanting to get down to the Suez Channel, meaning that a lot of these ships have to go down south of Africa. That is a lot longer. I think it's a week, 14 days, something like that more, meaning they are going to have a lot more ships, and there's a lot more mileage in the transportation, so they can charge more. So that was the reason, that was a trigger for this. That is another reason why it is a good thing to have an understanding of the overall macro picture you're looking into, at least if it confirms your setup. So I took a setup here, and I was aiming for something up here. I think I actually sold it on this one because I was not completely certain. But as you can see, I entered somewhere here, exited somewhere here. There was a nice 25% gain here, simply from understanding these support and resistance areas. And again, they are not magically made. It's just a structure in the market. There are people, big institutions, sitting and thinking, if Maersk drops to 9,000, it's a complete bargain. It's a steal. We want it there. Then other people, or maybe the same people, are saying, well, if it gets up to around 12,500 or 13,000, we start to sell. And then we see all the sellers come in up here, And it could be the very same people buying here and selling here. And I have a couple of friends that bought it up here because I thought Maersk is going to be fantastic forever. The only thing they looked at was the solidity. Is it a good company? And basically it is, yes. However, it was not well priced up here, and I definitely didn't want to buy it straight up into this. So as you can see from down here, if we just look at the rules, let's just remove the regression channel because we couldn't see that at this point. We had a cross of the lines here. The 8 went above the 20. That was nice. When did we see new higher highs and new higher bottoms? That's a bit hard because this one basically just went straight up. But you could say at least here, because that one took this one out, it retraced. So we could have gotten in somewhere around here. Now that is not in the bottom of the chart, but does it matter? Does it matter that you miss the first 100% when you enter and there is another 150 to be had here? So what we saw here was a good trend targeting upwards here. Now we did get a potential sell signal here. We did see a break below here, but as long as the lines has not crossed downwards, I often give it the benefit of a doubt. Let's have a look at it over here. It went up again, went down, went up, then it started to wiggle a bit, and we had a new lower high here, and it made a new lower low. At this point, the lines had broken, had started to turn downwards, and therefore I was not in it at this point. But had I been in it, I would have sold it here. Then we could have gotten an entry somewhere here that it got a bit confusing. And Sultan, you're writing, I never dare to play sideways trends. It confuses me. Yes, I completely agree. I only do it on the weekly chart because the weekly chart is so slow. And to make a structure like this, especially in a company like Maersk that has a liquidity of billions per day, to make a structure this perfect, I dare say, it really takes a lot of big players, and it moves very, very slowly. And I only do it in stocks. First of all, I only go long, meaning I'm not taking shorts. It's not like I'm playing on the downside here. Secondly, I only do it if I really like the stock. It's solid, it's well priced, and so on. And then I take it here. I have a little example from today. Today I bought demand, and that might be wrong. It might be that it continues down and then I just sell it. But as you can see here, there are a lot of lines in here. Let me delete some of them here. As you can see, we have an area here where there have been buyers a couple of weeks here, buyers here, buyers, 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 buyers. And I know we're in a downtrend right now, and that is where it, as you say, Sultan, is this really a downtrend? Do I want to take it straight into this downtrend? Now, the thing I do here is I bought it here today in 257, I think it was. So I have a stop loss down here somewhere where I can say, all right, if it breaks below all of these and there are no new major support, and there is maybe something down here, but I don't want to hold it all the way down here. So if it breaks down here, well, how much can I lose? I bought it in 257-ish. So there might be, I don't know, 6-7% down here. Demand, if we, it's a hearing aid company. If you look at it in here, here we go. We can see they have a 91 in quality score. They have low PEG ratios. They have nice growing revenue. They have a good growth in earnings per share. They have good margins. They have good returns on capital, so on and so forth. Valuations, if we put in the PE ratios, and if you don't know what this is, it is explained in the former webinars. When I put some quite conservative PE numbers in here, we can see that demand is in a very cheap zone down here. We can see that even in our bear case, there's an 80% upside. It might be wrong. It could go down, and then I just sell it and wait for a new entry. But as you can see, if there is it could easily, looking at these PE lines, it could easily go up to the green line somewhere here. That's up in the 360, 370. And if we look up here, that's actually up here. So I can take a trade here in a rock solid stock. And I know they have trouble. And there are some issues in the United States where they are discussing with the politicians about prices on the hearing aids and so on. But if I'm wrong, I could lose 6, 7, 8%. If I'm right, I can make 40. Now, is that a bet you want to take? If you can say, okay, 1 out of 3 times I take a trade like this, it gives me a profit. All right. Well, if 1 out of 3 I win something like 30 or 40%, and the other 2 I lose 5 to 10%, then I have a good solid strategy. So I'm not normally doing what is called bottom fishing. I'm normally not just buying something because it has dropped. I want to see it has good value. It should be solid. It should be well priced. But then if we have an area where it has just hit support, then I'm saying, all right, there are some reasonable chances that it could hit support here. And also reading all the analysis of it, I can see that many of the bad things with the company, many of their problems have probably been priced in. That is at least what many people think. So again, if I'm wrong, just take a loss. And this is an important part of having a strategy, or one of the important parts. That is that you need to put your ego aside and just say, all right, just because I'm wrong, it doesn't mean that I am bad or my strategy is bad. Just know that a big part of your fair part of your trades will end up as losers. Now let's have a look at the TPI chart, which is an important chart here. The TPI chart, as I said, it stands for turning point indicator, and we have 3 different parts of the TPI. We have the long-term trend, which is red here. Long-term trend can either be red or green. Then we have the weekly trend TPI and the daily TPI. I personally mostly look at the weekly TPI. A bit of shorter term traders can look at the daily as well. As you can see, there are 4 different colors here. It can either be green, it can be red, or there can be a gray bar or a yellow bar. First of all, let me clarify here. The TPI is what we call a statistical indicator, meaning it doesn't necessarily say something completely certain about what's going to happen. What we are doing is we're quantifying the movement that happens in the price at a given time. Then we look back in time and we see when has this sort of pattern happened before. And then we quantify that. And then we are saying, all right, in this stock, when it shows a certain structure, is it most likely to go up or down? And that is the red here or the green, the red and the green. Now, then we have some spikes. We have some outliers in these movements up and down. And that is where the gray and yellow comes in, because that is what we normally just call overbought and oversold, meaning that reaching an overbought area tells us it is most likely that this trend, even though it's green down here, it is most likely that there will be some selling pressure. And we did see this. It didn't drop massively. Then it turned red here, was still overbought, and then it dropped. Then we stayed red for a while. Then we came into an oversold area. Normally, when I see this, I tend to wait until we get into turning green here, and then you could buy it if you think everything else is okay. You should never just use this on your own. Now, what I use it for, let me have a look at, can't even recall Mbeya, if that is a good example on this one. Oh, like this. Yes, it's a fair picture of it. As we can see here, has been green for a long time. So just from the long-term green trend, we could have been in here. The massive trend. Sorry about these little dots. Like when we zoom out, they tend sometimes to come. Liam is trying to figure out why. I think we will fix it when we see the trading view that comes in here. I'm not sure why they occur. Then what I'm looking at, how I'm using the weekly TPI, one of the ways you can use it is to have a look at this. We have a gray area here. Now that is forming a new top, a new higher high. Then we get a new one here. We had two overbought in an area or in a row here. That was a new higher top as well. Then we got a new low here. That was lower than the last low down here. Okay, then we are still in a trend. Then we continues upwards. We have an overbought. Doesn't necessarily mean we should sell it. It just means, okay, now we have a new point in our trend. The last overbought we had was down here. Is this one higher? Yes, it is. Then we have a new higher high. Then we get a new overbought here. Is that higher than the latest low? Yes, it is. Okay, then we have a new higher low. Then we get a new gray area. Is that a new higher high? Yes, the last high was here. So yes, we have a new higher high. Then we got into a low. Was that a new higher low? Yes, it was. So I hope you can see that this builds the case with the trend. Let me see, Sultan. So in this particular case, you didn't take the advice of your TPI indicator. No, I didn't, because if we look at let's look at the demand again. Here. This one is definitely showing us something about the trend. However, in an area like this, where we have so many support areas, then I can live with a trend like this, because it's not a trend trade I'm taking. Had it been a trend trade, I would have listened to the trend, to the TPI trend here. But since this was it could be, let's just have a quick look here. Could be that demand is going to spend half a year going up, then half a year going down, then half a year going up, then half a year going down. Now, if I can time this one down here, so I can write some of the uptrend, then I don't need it to be in a trend. I just need to be aware that the second it starts to break the confirmation, to say, all right, it kept going down, then I say, okay, the big guys in the market apparently didn't agree with me that this was a good area to get in. Let's take, for instance, an example here, GN Stornord, which is incidentally actually another hearing aid company. As you can see here, first of all, let's have a look back. Just delete these big chunks here, because we can't see them until after the fact here in our analysis. So what we can see here is, first of all, some very big swings. 30% down, then up, then down, then up. But we do have an uptrend. Then it started to make a new lower low here. All right, we came up. We had a cross here, but it was not really a trade I wanted to take for real, because it didn't make a new higher highs. This was simply just too volatile. But then it came up, and we might have entered up here somewhere. Now, I got a lot of heat when I said I thought this was a sell back in September 21. A lot of people told me that. I definitely didn't know anything about investing, because what I saw was we had, first of all, a flattening trend, meaning the rise of the trend was flattening out like this here. So it was getting less and less steep. Then it broke down. The two moving averages crossed. It was down here. This could have been a support area. No one knew at this point. At this point, they had just acquired a company called SteelSeries that made gaming equipment. So this could have been the support area here, but it was way too expensive. I would never buy on a support area here, because it was just priced insanely expensive on our value graph. Then it tried to get up and was rejected. And up here in the 450, 470 area, I tell people this is just a absolutely disaster. It's too expensive. It's giving us a sell signal. Let's see, this was in September 21. Let's try and find it here just for the fun of it. Let's see here. All right, December 21. Let's go back and look. We might get these funny dots again now. It's just thinking for a second. Sometimes there's a lot of statistical stuff to chew on here. Well, as you can see, the trend indicator actually started to turn red here. Then where I said I thought it was going to go down was, I think it was around here. And I didn't know where it was going to go. I had no idea it would drop from 450, 500 and down to 100 or 110. But it did. And it was just a perfect trend. New lower high, new lower low, new lower high, new lower low, lower high, lower low, lower high, lower low, until all of a sudden it started to even out. It was as if the big guys in the market all of a sudden said, I wonder, with the earnings that they are having now, it actually starts to be a reasonable, fairly priced stock. So what I was looking at, and I was sharing this in some of my Facebook groups, I was looking at this. Okay, that we have a cross, we have a new higher high. It broke up through all of these resistance areas. Look at how many times it hit this resistance area here. Then it broke up. Now here, I was looking to enter. I wanted to see a fairly green candle, a good week, or at least halfway through the week, showing buyers are really coming in here. But they didn't. It just shot straight down through here. And had I bought it here, I would have sold it. But I didn't. And right now, we are actually getting closer to an area down here, which is interesting. An example of a stock that went straight through my stop was AstraZeneca here. Have a look at this. I took this one here, meaning that it was actually just outside no, it wasn't if I dragged it a bit further, actually, the regression channel here. But I bought it here. Good quality, good pricing, everything. And it turned green here. So I bought it and I thought, okay, there's a good upside here. Then it turned down. Let's have a look at the daily chart here, what happened. Here. I bought it somewhere here, I think it was. And then it just went down. And I sold it here straight away. I think I lost 9.5% on it or something like that. 8.5%, something like that. I just sold it. I had no idea. It could just turn up the next day and I could consider buying it again. But it just kept falling. And right now we are at 64. Do I know where it's going? No, it could be going to 40. Could also turn around tomorrow and go to 200. I have absolutely no idea. But when we see these structures are broken, it often means that big guys know something that we don't. Remember that all of us sitting, I guess, in this webinar, all of us are part of the group we call the dumb money. It's not because you're stupid. I'm not saying stupid money, but what you are less informed. You have less information than the big guys. And the information you have, you're getting later than they are. We are the last ones to get the information. So I might have been right here, but something happened and a sellout started. I just don't want to be a part of that. You can see just after I bought here, the two moving averages crossed. And it went down through my support line, and I was out. Sultan, you said, yeah, that top triangle could have shooted upwards too. Entering long was justifiable, and it has shooted up, but went to it. Yeah, and again, it's a game of stats. It's a game of math, and it's a game of stats. For me personally, investing is just a math game. It's a statistics game. I just want to have an edge. I just want to have a bit more winners and losers. I want my winners to be larger than my losers. And as soon as I can see I have a strategy that gives me that, I just want to take trades every time I see it. So let's just have a quick recap here. And I've soon just about talked an hour. So I will soon be closing down for those of you that have joined us on Facebook. But as I said, I have two main strategies or two main things I'm looking at. I'm looking at trends, and that is both on price action and it is on the moving averages here. When the trend has been going for a while, I often draw the regression channel on it. A little hint here, this is not a very good regression channel. The reason why I say that is down here is a little number. It's called Pearson's whatever, something number. And what it tells us is that the higher it is, the more precise this channel is. Meaning that here we can see so much movement in the price that the channel has to be extremely wide to cover the data. So here we have 0.83. We don't like that. We want 0.9 or something like that. If we have the Ambea here, and we drew a regression channel on this one, let's just have a look. Here, we'll probably see a higher number. Let's see. Oh, yes. See down here, 0.99, meaning this is an extremely precise channel. So the higher the number, the more reliable the trend here is. So we have the trend, we have the moving averages, the trend channel, we have just the price action looking at tops and bottoms. And at some point when this one starts to break down, if the two moving averages has not crossed, then I might just give it a bit room to see if it can break up again. But if it makes something like this, the two moving averages have often crossed, and then I'm just out. Meaning we are never getting in at the bottom, and we are never getting out at the top. That's just how it works. And then I have these big resistance, support and resistance areas where sometimes take trades as well. It could also be a bit of a combination. Let me see if I have an example just before I let the first part of you go. Oh, this was another one. Docs, I actually didn't take this one, but I was close to take one down here. I know it was a lower low down here, but it was just such a nice trade. And then the bias came in shooting up. But I do like the lows just to be in line with each other. So I was a bit nervous about this one breaking down, but it could have been a perfect setup. Had I entered here, I could have put a stop loss 6-7% down, and the next clear top was up here, so that was a 2-to-1 or something like that on a. But there was a couple of things wrong with the trade. I think there's some of the fundamentals as well that was not completely right. I think I had one of the others. Let me just see here if it was this one, just to give you. Yes, here, for instance, we can see that I both use the trend and some clear support and resistance areas here, meaning that we actually get down quite deep. It's still a trend. We still have the higher highs and the higher lows, but we are down in an area where there have been support and resistance before. Then we come up, drop down. We are not all the way down. Someone might say, yeah, you could justify this one, but this one actually just shows when it starts to go up here that on our normal trend, we would say, okay, we have some bias coming in here, The people that were left behind here, for instance, they are annoyed. They say they put an entry point here because they saw it right, or they sold it here and they want to get in here. But here, the buyers are too eager. They don't let it get all the way down here. They enter here and send it upwards again here. So actually, Eagle Material was one I was looking at just the other day. Unfortunately, I didn't take it. It would have been a nice jump here yesterday with 6% up, something like that. But I think that was a Trump trade as well. So I hope this makes sense to you. Are there any questions before I let the first part of you go after the first hour here? Anything I haven't been clear about? Remember, these timing tools are not standalone tools. They are tools that we use on solid stocks that are priced correctly. So that is an important thing to remember. Any questions before I close down? All right. If any of you have any questions after I shut down here, you can always contact me. Write me, write Liam, ask questions. But let me just make sure all of you that are on YouTube, you just hang on just a short while. And thank you very much for those of you that have listened in on an hour here. You'll get an email tomorrow. I think Liam is sending out tomorrow with some links and some and a good offer if you want to join my stock scanner. But you can always be a member of the free group, of course. So bye for now. Thank you very much for tonight. All right. I should only have those of you left that are on YouTube. Could you please confirm that you can hear me still, that I haven't shut you off by mistake? And while we're waiting, just indicate in the chat that if you're still with me here, I think if you're interested, we can have a look at some of your stocks, maybe some that you think are in a trend or that you are considering buying or selling for that matter. And let's have a look at it with the 3-point playbook. Okay, nice. You can hear me. That's good. I can tell you that I have a couple. I found a couple that where the trend is quite interesting. For instance, here you can see this is a good example of something that is basically a mix of trend and support resistance here. I haven't looked too much into the fundamentals here, but as you can see, it is finding good resistance, coming up, getting just good support down here, of course, coming up, finding resistance, being shut down, being sent up through this top area. Ben, I'll have a look at Qualcomm just in a second. And Carsten, ANF coming up. Tesla, ooh, important one here. So as you can see here, this is actually a mix between the two. Jesper, let's have a look at Tesla because that is an interesting case. Now, I have brought it up a lot of times. And right now, as I said when I talked about it down here, I said Tesla is completely crazy priced, in my opinion. However, I said that in the video as well. It can easily go up if the Tesla followers, if the fans, if they are willing to pay a higher price earning. And that is what's happening now. Of course, Trump won the election, and he will probably, I think Elon has made a deal with him, something in the area of I support you if you become president, you leave me alone, give me a lot of tax credits, a lot of tax breaks, and so on. I guess that is how politics works. However, in this, where we have the expected earnings into the future here, I have put some different price earning areas on here. Right now it is at 80 and it's probably going up. So yeah, it's going up a bit again today. So it's going up towards 100 in price earning probably soon. Is that reasonable? That depends. If you think his collaboration with Trump will benefit him a lot, well then if you get a lot of tax breaks, they make a ton of extra money. I am normally I'm a bit cautious when it comes to stocks that have a price earning of 80, 100, because what it actually shows us is that if I pay a price earning of 100, I get 1% in return in yield of my I pay $100 for every $1 they have in profit. That means either one, I should be extremely patient. I should wait 100 years before I have made 100 times 1%, so I have doubled my money, or I should hope for some massive growth in the company. And right now, the growth in the price of Tesla is fueled by people that are rooting for Elon and for that. Well, I don't want to offend anyone, but I see it as almost an oligarch thing, where he has bought his way into the White House. I don't like that particularly, but you're welcome to disagree. What I feel is that if they should have a price earning of 35, which is still triple the normal the car producer, they will drop 60%. That will probably not happen now when Elon and Trump has teamed up. But let's have a look at it here, because right now we could find some areas with some potential resistance. But right now I would be cautious. I would definitely not short Tesla because it has shown to be very expensive. In a case like this, where there's an election and there's kind of a one-time trigger, it's something we haven't seen before, really, not in this scale. I would not trade Tesla. I would not buy it because I think it's really lousy priced, but I would also not short it because when things like this happen, in my opinion, completely irrational movement. This has not any founding in fundamentals or anything. Then I just stay away. Could it go up 1,000%? Yes, it could. But again, it's about being confident in my strategy, and I have plenty of stocks to choose from that are solid and well priced. So why would I take a speculative bet like this one? So, but it is interesting. It's yeah. For those of you that are in it, that are long Tesla, congratulations. It's a good profit right now. Another good thing for Elon Musk is that he had some very severe court cases, some lawsuits against him. And one of them had several points in it, and that was about stock price manipulation, which could give him up to 10, 15 years in prison if he was indicted. Or if he was convicted. But I guess with his collaboration with Trump now, they could throw all of these court cases in the bin, just as the one with I guess Trump is not ending up in prison either. Let's have a look at Qualcomm here. And Ben, that was you here. Now, Qualcomm doesn't have a very good trend. If we look at it in here, QCOM, there's no doubt that it's a good quality. There's a good PEG ratio, revenue. Well, revenue was under pressure in 23, but it has started to go up again. There's some very good margins. They have been higher though, so it's a very good, well-priced company. Valuation here, definitely, it's cheap. And that is with 7, 19, and 21 in price earning. They have surprised positively again and again. So there is some very, very good setup. And remember, there are people that just buy these stocks without any timing, just saying, solid stock, cheaply priced, let's just go for it. The thing is, and that is where we don't want to go into a value trap where the stock drops because of something. What I often do is that I jump into this market screener. We will soon have this ourselves. We have started tracking all the analyst recommendations, logging them. So we will soon have a chart like this. But what I'm looking at here is how has the expectation been revised? Oh yeah, but you said that. Let me just have a quick break here. There is the Fed, and they cut it just as expected here. What will be important, of course, is after the webinar here, I'll have a listen to Powell's speech afterwards, that's press conference. I don't think there will be anything major there, nothing that really moves the market. If we look at the FOMC countdown here, we can see what do they expect next time. Oh, it's probably skewed right now, so we can see it in a while. Or is it coming up? Maybe, yes. We can see right now the interest rate has been dropped to 4.75 here. So next time the market is fairly certain that they will drop it once more. So I guess that is it. There's nothing surprising there, and it shouldn't move the market much. Let's just have a quick look. Nah, not much is happening here. So that was kind of what was expected. Anyway, back to Qualcomm. Now Qualcomm, good stock, fairly well priced. And you could say that, but again, we should be careful just looking at things that confirms our bias. Right now, it has actually broken down here, and I think if I had it on the book, I would just hold it and just wait and see. It seems like it has entered some sort of some sort of sideways range here. If it breaks down through this, I might consider selling it. They had earnings yesterday, yes. It's not completely convincing in its in the price structure here. So it's not always that you can say exactly what you wanted to do. And when things go into a range like this, it often shows us that the big guys don't really know. Some are sellers, some are buyers, so they're just playing a bit of table tennis here, ping pong back and forth. So I would wait to see if there was some real good strength here. ANF, that is one I have in my portfolio, Abercrombie and Fitch. And this one, a good solid stock, no doubt about it. And I bought it here, back here somewhere in the 140 range. And it went up. And you are always thinking to yourself that you must be a genius here. But then it dropped back. But it just dropped back exactly to this resistance area. That also is a former top area here. So I'm actually not that concerned. It's up 4.3% today. So that is fairly nice. So that is, again, one of these bounds, one of these trampoline trades here. That you can, so if you wanted to get into Abercrombie and Fitch, you might want to do it now if you have been waiting for a good entry. If we look at it here, good quality, massively good quality. It's a very interesting stock, and as you can see here, I put 16, 18 and 20. We might bump one down and one up here to get a bit more spread, but it is very well priced here. 18% in our bear case, 66 and 6 in our bull case. So I am completely confident here. Another thing that I'm using here, let's say I have been in it in this run here. And as you can see, this was back in June 24. Let's just have a look at it here. This was it. And this one here is on the daily chart, I think, isn't it? Yes, it is. So this is not a weekly chart. But had we started to see something like this on a weekly chart, lower highs, lower lows, and it was up here in the expensive area, I might just had taken it off. So as you can see, you could have entered it somewhere down here in the 40 area, and it would, even though it went up, it actually stayed in the cheap area for quite a while. Then you could have exited in 140, entered it again and down in 110, 112, exited up here in 170 something, and then entered it down here again. Well, it keeps going up or going sideways, but we have no idea. But this is it's a very good trampoline setup here, as they call them. All right, the last one here mentioned is Hershey, the candy maker. And that one is not looking good, to be honest. If I am looking at it here, to be honest, it's ages since I have looked at it on the fundamental part. I remember it popped up on my screen at some point. Yeah, you can see the quality is very good. Already here, I get an indication of something might be wrong. Let me just look at it here, because the PEG ratio is way above the 2.5 that I normally that I normally look at. The revenue is basically flat. The growth, there's not much growth in the earnings estimates here. Return is fair, margins are fair. Definitely. Valuation, how is that looking? 10%. What has it been doing before? Somewhere between, let's just put 18 and 21 and 24, just for the sake of it here. So on that part, it looks like it's in the low part here, but this PE trend is not really trending anywhere. It does say 22%, but I do like this PE trend to just be going up because it gives us a lot more room to the upside. Looking at this one, you could have entered it definitely down here if you thought it was good value and everything. There was some entries down here that could have been had, but then I would have sold when it broke down here. I really don't like it, to be honest, from a technical point of view. I would not. Let me see. They had earnings today. Disappointed a bit. So that was no, thank you. That was a clear sell for me, definitely. All right. Yep, you're right. Do consider the rumors about one of the founders or Sisu being sued. I remember there's a grim case in the medias recently. About ANF. If it comes up with the, I am tracking news and lawsuits and so on, and I did hear the rumors. If it comes out and it's real and everything, and I read into it, I'm not an expert in the legal matters, but for instance, I think I mentioned before when I was in 3M, and it all of a sudden came out that they were being sued for some hearing thing, the hearing protection. Let me just remove all of this crap here. I think I bought it somewhere here. And then it came out that they had this lawsuit that could cost them $10 billion, and the stock dropped down. And then I just exited because that is a tough one too. We didn't know where that was going. Then they settled. And if you wanted to enter, well, they had the higher tops here, the cross of the moving averages, retracing back to the line here. So that was a good point of entry here, definitely, if you thought that the fundamentals were solid. Mike Jeffries. All right, that is a bad one. Well, to be honest, if I read into it and if I can see that there's no change in the fundamental structure, Abercrombie and Fitch is a massive, massive big company. And even though that he was a CEO, Mike Jeffries here, I'm reading into the news to try and figure out will this massively affect their strategy. If he has been a good CEO, and he could, even though he had been trafficking human beings, he could still be a good technically a good CEO for a company. Then he might have built a company where he can actually leave for prison without anything. But I would definitely say that this could have an effect, but in the long run, in a company that is let's just have a quick look. A $7 billion company. It's about 50 billion Danish kroner. I don't think it will have a massive effect. However, it doesn't really matter what I think. And I'm not trying to predict anything. If the big guys in the market are saying, all right, we're just selling, we're going down here in 126, and I bought up in, can't recall, 140 something, then if it drops down, I lose 10%, then I'm out. Normally, I have no more than 2, maybe 3% of my money in each stock. So that it will be 0.2, 0.3% of my portfolio. It doesn't really matter that much. It's always nicest to win, but we cannot really we cannot really do anything about these. This is a grim case. I hadn't heard that he was arrested, actually. Abercrombie and Fitch is a good case, though, of the trend. If we look at here, we could have entered here. Sometimes I like to draw a trend line if it's a downtrend and it's very obvious, and we can see it breaks, have a retracement here. We could have entered in 25-ish. Maybe we would have been cheated out here. Maybe we were clever or lucky enough to say, okay, there's a top here. It's just down resting. It's always easy in hindsight to say, oh, I wouldn't have sold here. Maybe we would. It's hard to say. But then we could just have entered up here, where we made the new trend, a retracement. Then instead of getting in 25, we would just get in 38. As you can see, didn't really matter that much. Then it started to get a bit more messy up here. However, well, right now, going up nicely today. Let's see where it takes us from here. So yeah, Any other suggestions? I've almost talked in 1.5 hours, so I think I'm about to stop soon. Any other, just in the very last part here, we should have a look at, both with the timing tool and everything? Or should we just call it a night? Not really getting much here. By the way, now while I'm waiting for this, we can have a look at a couple of Danish stocks. And this is not to really hurt your feelings here. But for instance, Vestas, the wind turbine company, have been a very good example of this, where we could actually have made some great money, at least from this. Remember, we cannot really make it from the first one. We need to see that there is some support here. But from this one, we could have made a very good profit. I know a couple of people in the group that were considering buying down here because I just didn't like the fundamentals, to be honest. So I think that is a good example of when it often fails, because Vestas here, quality of 50, I'm not too impressed. And I have put some, and the TPI chart, red. It is green here, so you could have considered it. It was oversold, definitely. I think I put some projections in I found somewhere, which looks like there could be a lot of upside. But again, we are not in the PE trend here. I don't really like setups like this where there are massive gaps with no earnings, and it just really it wasn't appealing to me. So I didn't take it here. And now, where it drops down, tries to get up, and then gets hammered. Of course, I know this was a Trump play here, but we could see the same with Ørsted here. As you can see, that one actually made. I was out speaking in Aarhus in the Danish Stock Association in late December last year, where it demonstrated our value chart. And I said, well, from a value point of view, there was definitely some upside. I think it's at 30 to 40% upside. So, well, 35%. Here we go. And then it turned around. Now, this is not a nice trend right now. It's not really going anywhere. I wouldn't want to take this one. You can see up here, Ørsted, I called it a sell here in 1,000. Then it went up here. I called it a sell again in 1,000. And people were calling me all sorts of ugly words. And it has just been a mess ever since. They have been in all these hydrogen projects that hasn't gone anywhere. They have closed them down. So, Brian, you mentioned Ørsted. So, yeah, there we go. ASML, from a technical point of view. Let's take the US versions. As you can see, I put some areas on it here. If we take it here, you can see went down, made a new lower low, tried to get up here. The lines had crossed, was rejected here, and that was where I said I would probably sell it here. Then I put an arrow on here, so that if you wanted to buy, if you thought it was a fantastic case, this could be the place to do it. And then it tried to get up and just got hammered down. So right now, I would expect it to test the next area down here at 580. But I have absolutely no idea. It's just a working hypothesis. So we never know anything for sure. I do like, however, let's say I had entered it here. I do like to consider all my selling options when I enter, so that I know, okay, and I like drawing this on the chart. Let's say I had entered here. I'll say, okay, if it drops down here, I'll sell. Or maybe I will wait till it get down here and try and buy some more. What if it goes up? Well, as long as it stays in the regression channel, I like it. What happens if it breaks? Well, then I have rules for that. So I'm never surprised of anything. Of course, I can be surprised, because I had a stock yesterday drop, 25% out of the blue, or 20% or something like that on earnings. That is surprising, but then I know what to do. So I never get completely in shock and sit there and don't know what to do. Also, because my position sizing are so controlled that, for instance, when I had CrowdStrike and it just went straight down 25% because they made that update that made the airports and hotels go completely black. Well, then I had a rule for it. If something happens where it's a one-time event where I cannot make a stat out of it, I cannot say, okay, the last 20 times CrowdStrike have crashed the world's IT, this happened. Then I could make a stat out of it. But this only happened once. So I sell because I have no way of predicting anything or making stats and out of it. So then it's no longer a math game, then it's a fortune teller game. Last one, Jeppe, you're asking about Baba. Now, that is a Chinese-based stock, which there is a bit of nervousness around the Chinese-based stocks because what will Trump do? Will he start a new trade war? Maybe. However, looking at the trend, it started to make new higher highs. Sorry, I have a cat eating my earplugs here. Sorry about that. Here we go. It started to make new higher lows here. Then it made a new higher high. Very much higher high, higher low. Then they definitely crossed here. So you could have argued that entering down here around 80, I know a couple of my customers that entered down here in the 70 area. And then it has basically just been a buy ever since. It of course went up with the big Chinese pump with all the stimulus. Right now, well, it's actually not that bad. It has gone down for some weeks, and that of course hurts. But right now, it's leaning just on this one. The trend is good. I actually like it here. There's nothing massively wrong with it. This would be a normal place for it to rest before there could be a leg more up. I know if you have bought up here, it's a bit annoying being down 20%. But then again, I never buy on these FOMO runs. I wait till I get down here because then I can make a risk reward. There's a lot more sensible. A lot more sensible. Something like this, where if it just aims for the next top and I can put my stop down here somewhere, well, then I have a 2-to-1 or 3-to-1 or whatever. And that makes it a good trade. Putting it up here, entering up here is extremely dangerous. You have to put your stop down here. And it will take a really huge movement just to get a 2-to-1. It would have to go up by 50%. So that is one of the reasons why I'm trying to time it here, is also to get a better risk reward. All right. I think we should call it a night now. I hope you got something with you here. Again, as I talked about, let's just have a quick look for the very last one, the Baba here. And with the value chart, I have looked at this for a long time. I didn't take it because I was a bit worried about that the whole Chinese situation. But looking at it down here, it just seemed like a bargain. And it turned out to be, at least for now. But looking at the TPI here, it's good long-term green trend. Then going into overbought up here, reasonable enough. Going into red, yes, but now it's actually in an oversold level. So if we, for instance, next week could turn this one green, then I think that could be a good leg up here. I have a good feeling about that. Again, anything can happen right now, and that is what comes with Trump. I'm sorry to say, volatility follows Trump because he's unpredictable. I know that is what someone likes. I don't, because it's I have seen him send the oil price up with 10-12% overnight from a tweet. I have seen him send an entire sector down with a tweet overnight. It gets a lot more erratic and unpredictable. And to be honest, that is not what financial markets need right now. So that is how I watch it. You're welcome to disagree. I have he was not my favorite candidate, but again, it will be interesting to see. I know a lot of Americans chose him because they were tired of inflation, and well, they blamed Biden, and I think that is normal to do for a population, to say the one in charge are the one that is responsible for inflation, for instance. I think some people will be surprised in 4 years about the inflation level. That's my guess, if Trump's actually does what he says, because that will be that will send the inflation massively up. But let's see about that. Maybe it all turns out all right. I will say thank you for tonight. It was very nice having you here, and I'll just do a bit of editing on this tomorrow morning, and then I will put it out along with the Danish, so you can watch it again and again and again. That's all for now. Have a nice night out there, and I'll talk to you again soon.